So today we are going to talk about the stock market crash 2025 and the market correction which has been happening caused by tariffs. And then Trump's new tariffs on China and China retaliating by saying that no, we are not going to come on the negotiations table. And this then may create an economic slowdown, a temporary economic slowdown. That's the keyword, temporary economic slowdown in the US, which will cause rising recession fears. And all of this is creating uncertainty in the market, and the market doesn't like uncertainty, and therefore the stocks are falling. But then we will talk about the stocks which we can buy in this market, stocks which have high growth potential and could double from here in 2025. So the video is about the best stocks to buy in a stock market crash 2025. Hey everyone, welcome and welcome back to my channel. This is your friend Abhishek, but not a financial advisor. And without further ado and without wasting your time, my time, let's get right into this. So tariffs are considered as fair trades, right? It's about bringing back jobs, protecting the industry, but this is kind of a surface explanation for tariffs. Now, why Trump is doing global tariffs, in my personal opinion, could be two reasons. Now, as we know, the US economy is facing really high interest rates, right? And therefore, the US debt is also increasing. Just the interest rate on the US debt per year is around $1 trillion. So if the government would want a high economic growth, what they might have promised to the people, then for that, a low interest rate environment is really necessary. But with the inflation, that's not going to happen. So what is needed is a slow, temporary economic growth and a recession, a temporary short recession, and therefore the Fed then can reduce the interest rates and therefore a growth. So what tariffs will do is it will raise the cost of buying goods, and then that will bring the economy to slow down, and that will bring the US into a temporary recession. And this is what the government would want, because now the US is in an inflationary environment, and with that, interest rates coming down is not possible, as because like we already saw in the last meeting, Fed already canceled one interest rates cut. So that might happen again, and therefore this is just a theory that this could be Trump's plan. But this is also giving Trump another benefit, because when the economy will slow down, recession will come, the interest rates have to come down to revive the economy. The interest rates coming down means the US debt can become cheaper, because after the interest rates come down, the government can refinance the US debt at a cheaper interest rate. This could be one of the theories. Now, the other point, which I think, in my personal opinion, could be the reason why Trump is doing this, is to bring all of the nations to the negotiations table. Like we already saw, Japan is already in line and is saying that they are the first in line for the negotiations. Vietnam already did that. That's why Nike and Lululemon were popping up, because most of the production for Nike and Lululemon is in Vietnam. And Europe today also said that, okay, they are ready for the negotiations. So US is trying to show their power. This might, of course, create a trade war, but this is what the US government is doing right now to bring more jobs into the economy. But let's see what's going to happen, because this is not that simple as it seems. It is going to hurt US in the short term to mid term for sure, and us investors as well who are investing into the US market, but also the US companies. So the economy will slow down, and that will hurt the US economy as well. And many other stocks, like SoFi, for example, I'm talking about just SoFi because I have covered SoFi in my last video as well, because they run on borrowing money. And if people don't have the buying power, then how will they borrow money? Okay, so slow economy hurts everyone, but that might be a short-term plan. But anyways, these are my opinions, and these are the two main reasons why I think Trump might be doing this. Now, let's get on to our high growth stocks, high growth potential stocks, undervalued stocks, which could double from here in 2025. Okay guys, so the first high growth stock which could double from here in 2025 is none other than Trade Desk, which is currently trading at $46. Now, why I do believe that Trade Desk could be a good buying opportunity in this current market situation? Well, I will not go in-depth analysis for Trade Desk. So if you guys would like to have an in-depth analysis for Trade Desk, then do leave a comment in the comment section down below, and then I'll definitely make an in-depth video on trade desk. So for now, I will just cover a few important points, and especially the financials, because in this current macroeconomic situation and a possible recession, if what I mentioned earlier in this video happens, then those companies are more important for us, which have a good financial background and have a good cash flow, because if recession happens, then only those companies will survive and can have a better chances of coming out with a higher stock price out of the situation, is when they have a good free cash flow in this current macroeconomic situation as well, like same in the Ronda situation. Okay, anyway, so we can see that the total revenue has been increasing amazingly well. It has been increasing at a compound annual growth rate of 20 to 30%, and the free cash flow from operating activities has been also performing quite good, actually increasing at a CAGR of 65%. Guys, this is huge. And let's just click on the free cash flow, so then we can have an idea of what's happening with the free cash flow. Free cash flow has also been increasing at a rate of 100%. So this is huge. So in last 5 years, it has been increasing at a rate of 100%, which is huge, but we'll come down to that point as well. And anyway, so let's talk about the analysts' predictions. The analysts are predicting an EPS of $5 until 2029, and the current P ratio is 25. Not the current, but the forward P ratio is 25. So just with the forward P ratio of 25, that's a conservative number in my opinion, a conservative multiple. Just with these earnings per share estimates and a PE estimate of 25, we get a price target of $125. So that's a 3x from here right now, 3x already. Okay, but we will do a DCF model, and then we will have a much better idea on this. So let's talk about TTD and the DCF model. So here we are having a free cash flow. Now, like I said, the metric growth rate for free cash flow has been 100%, but the CEO said in the quarter four 2024 for trade desk was not that great. He mentioned that there were a lot of headwinds, and these headwinds might remain in 2025 as well, and that's why he himself has reduced the projections for the 2025, and that's why the stock fell by more than 60%. But I am going to do the same here. Okay, so I am not taking a metric growth rate of 100%, not in this current macroeconomic situation. I'm going to cut down to 30%. Yes, this is really huge, but this is what I'm going to do, because I do think if the revenue is increasing by 20% only instead of 30%, then it might be that the free cash flow might also reduce by 40 to 50%, because they also mentioned this, that they will stop dilution, and if they are stopping dilution, that will take a massive hit on the free cash flow as well. So this is what we are going to do, and then we are going to change the price ratio as well. 123 was the price to free cash flow ratio, but that is again really exorbitant in my opinion, especially in this current macroeconomic situation. I don't think that investors would like to pay such a high premium for any business out there, not just trade desk, any business. We can see that even with good earnings, all the businesses like Amazon, Alphabet are taking a massive hit, and their multiples are shrinking, valuations are becoming better and better. So I will say let's take a price multiple of 30, and then we get a future stock price of 134, 200% upside potential, fair value of 80% above the current stock price, and increasing, we are getting a return of 23% year over year. What TradeX has to do to reach this is that currently they are generating a free cash flow of $632 million, and they would have to generate a free cash flow of $2.35 billion. So if you do think that they can do that in the next 5 years, then this is something which you should consider. This is a stock which you could consider in the stock market crash 2025. Now let's talk about the second high growth stock to buy in 2025 in the stock market crash, and that's none other than Nebius. Yes, at the time of recording this video, Nebius is trading at $20 and it's down by 4%. It's okay. So why Nebius? Well, now before we jump on to some of the analysis on Nebius, I would like to clarify one thing. Yes, I did say that in this current macroeconomic situation, we would like to get those businesses who are proven to have a good track record of good positive cash flow and can survive this current macroeconomic situation. Nebius is an exception. Why is an exception? I am buying those companies only who are positive cash flow, but Nebius is not a positive cash flow yet. Why I'm buying Nebius is because of it being in the semiconductor space and having a direct link with Nvidia. That's the only reason why I'm buying Nebius right now, and I do believe that it could double from here. Yes, easily. So first of all, Nebius will be an early adopter cloud provider for the NVIDIA Blackwell Ultra platform, offering NVIDIA GB300 NVL72 power instances, announces general availability of NVIDIA Blackwell GPU capacity at US data centers beginning in Q2, also named as ecosystem partner for NVIDIA Dynamo Inference Engine. This is what I mentioned. NVIDIA grows, Nebius grows, and this is what we are gonna see in the Q4 2024 results for Nebius as well, because the results are coming this April. So we will see another record revenue from Nebius. We will know if Nebius is on the right track to become a 2x from here or not. So we can see right here that Nebius has been performing quite well. Like I said, I am not just buying those companies which are not positive cash flow. There are some exceptions like Nebius, but I'm not putting my hands into any other businesses who are not in this space, because we do know that Trump's tariffs will not affect until now the CHIPS Act. Okay, so Nvidia is safe, and that's why these companies are going to be safe as well. That's another reason why Nebius is in my list to buy in the stock market crash 2025 and could double from here. So like I said, guys, if you want the detailed analysis on these stocks, then do leave a comment in the comment section down below and I will make a detailed video on that. But for now, that's it, and that's all for this video. And I hope you guys liked this video, and if you liked, then please leave a comment in the comment section down below, guys. You don't do that, and hit that like button, because it takes 2 seconds for you, but it really helps the channel 20 times more. So please smash that subscribe button as well, and I'll make more videos for you guys. And if you guys are interested in making a portfolio which consists of those stocks which could double from here, you're most welcome to join our Patreon's community. Link will be in the description below. But if you don't want to join, then you could watch these 2 videos, because they do have some of the stocks which could double from here in stock market crash 2025. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.